the stock market is absolutely ripping right now. Yesterday, both the S&P 500 and the NASDAQ scored their highest close since April 2022, 14 months ago. And heading into Monday, the S&P jumped for 4 straight weeks, and the NASDAQ, which is home to a bunch of the tech stocks, has had a 7-week winning streak. These are serious gains. The NASDAQ is up almost 30% this year. So what's driving all these positive vibes on Wall Street? There are a couple factors. The government reached a deal on the debt ceiling, so they avoided a catastrophic default. The regional banking crisis never seemed to spread to the broader finance sector, and the hype around AI is just juicing tech stocks to record highs.
Honestly, this still feels a little weird, and it feels like we shouldn't be hitting these record highs that we are, despite everything that you mentioned, because, and I've seen just reading around a little bit, people are calling this rally pretty narrow, which means that a lot of the gains are concentrated in a relatively few amount of companies. And so when that happens, people get a little nervous because if the entire market's being propped up by like the Nvidias, the Metas, the Alphabets, the big techs of the world, then that means that we can come back down relatively quickly as well. So yeah, there's something to drop to your friends that when they talk about the stock market, say, hey, the rally's a little narrow, don't you think?
Okay, but here's another thing to drop to your friends after that, which is that it was narrow, but it's getting wider, which is why they think that this rally, it kind of has some legs to it. So yes, so in May, 8 stocks were responsible for the S&P being positive. Mm-hmm. That is insane concentration. But since that, now this month, it's grown to 20 stocks responsible for the S&P's positive gains this year. And when you look at small cap stocks, which are those, smaller companies that encompass the Russell 2000, that's up 7.1% in June.
So we're getting wider. This is good.
We're getting wider, which is a little more fundamental. Toby, I want to hand out some game balls, if you will allow me. Putting on my high school football coach. There are a few stocks that are doing really well. First goes to Apple, closed at a record high yesterday. Old, reliable, cash flow, just
closing in on $3 trillion.
Closing in on $3 trillion. I think it's within $100 billion of becoming the first company to reach a $3 trillion valuation. $100 billion sounds like a lot, but it's close to $3 trillion. My other game ball is going to Tesla, which has gained now for 12 straight sessions, its longest streak ever. And the recent bullishness is around this charging network that we talked about last Friday, where analysts say it's going to give them an additional $3 billion in revenue now that Ford and GM have hopped on board and it becomes the industry standard. My final game ball is going to Oracle. So yesterday, Oracle hit a record high after its earnings report showed strong demand for cloud computing that powers what else? AI. And founder Larry Ellison just passed Bill Gates as the 4th richest person in the world.
Good for Larry. We haven't talked about Larry Ellison in a minute, so good for Oracle as well. Hey, thanks for watching. And if you want more Morning Brew Daily, make sure to hit that subscribe button. And also check out the rest of our episodes wherever you get your podcasts.
New episodes drop at 7 a.m. Eastern, Monday through Friday, and you can email us at morningbrewdaily@morningbrew.com.